Welcome to the Real Estate Deep Dive with Paul Garrison from JP Associates REALTORs. Today we're going to be taking a look at home price appreciation and what's important to keep in mind when you hear reports based off of this. So here we have the latest update on year-over-year house price appreciation as of August 2021. So this slide is showing the reported numbers from three of the major sources: FHFA's Home Price Index, CoreLogic's Home Price Insights Report, and the S&P Case-Shiller U.S. National Home Price Index. The first thing you will notice is there are different numbers: 18.5%, 18.1%, and 19.7% respectively. Each of these entities reports on slightly different things at different times using slightly different techniques. I will touch on why that's important and why it causes the difference in these numbers. But first, to give a little context, let's take a look at this quote from the National Association of Realtors. The median sales price of single-family existing homes rose in 99% of 183 measured market areas in the third quarter, with double-digit price gains in 78% of the markets. From 1 year ago, the median sales price of a single-family existing home rose 16% to $363,700, an increase of $50,300. This last part is probably what we're going to hear a lot of in the media as far as the median price or sales price of the homes has gained basically $50,000 in just over a year. The problem with this is that median sales prices can be distorted based off of the mix, and what that means is if there's more higher priced homes available or that are on the market than lower priced homes, that's going to obviously shift the median upwards. Or the other way around, if there's a lot of lower priced homes available on the market compared to higher priced homes, then that's going to shift the median price downwards. So taking a look at this quote from Bill McBride from Calculated Risk, he says, median prices can be distorted by the mix, and repeat sales indexes like Case-Shiller and FHFA are more accurate measures of house prices. The Case-Shiller and FHFA repeat sales indexes will probably show acceleration in house price growth in the coming months. So what does he mean when he talks about repeat sales indexes? Well, those are indexes that look at year-over-year sales of homes with similar attributes: location, lot size, number of bedrooms, etc., rather than looking at the median of all the homes. So with that in mind, let's take a quick look at the regional breakdown of FHFA's price growth. So while the national average is still 18.5, if you break it down and look at it regionally, there's actually only 3 regions that are above 20% growth. Anything above 20 is kind of a bit alarming if you're seeing that year over year consistently. In the last part of Bill McBride's quote, he mentions the likelihood of seeing deceleration in this index over the next couple of months. So this is probably the best graph to kind of highlight that. So price appreciation has actually accelerated every month this year so far. So looking back towards the end of last year, beginning of this year, we were at about 10% year-over-year price appreciation. We actually watched that, though, increase each month. So it's actually accelerating, moving faster. We're actually seeing more and a greater amount of appreciation each month, year-over-year. So if we look at all three of these numbers on a linear graph, you'll see that it does appear that price acceleration is starting to peak. The key thing to note is that it's the rate that prices are accelerating is what seems to have peaked, not price appreciation itself. So if the numbers are at 18 this month, but next month they're at 17, that doesn't mean that homes are losing value. It just means they aren't appreciating in value as quickly. So the key takeaway is that home prices are decelerating, not depreciating. With that said, I would like to leave you with one nice thought. One of the byproducts of such strong home price appreciation over the past year is the amount of equity homeowners have in their home. Adam Data just released their third quarter equity report. It shows that 39.5% of mortgaged homeowners have at least 50% equity in their homes. That's a significant increase over the first and second quarters of this year. So the question becomes, do you know what your home would likely sell for if you were to put it on the market today? How much equity would you have? Do you want to leverage that equity to sell your home and trade up or trade down depending on your needs? Give me a call and I can help you answer these questions. Many of the metrics and numbers in this presentation are based off of the national real estate market. However, local areas can vary. Please give me a call and we can discuss your situation. Have questions about your specific needs or location? Please contact me at 214-683-8188 or paul@pauldgarrison.com. Want more information about the housing market and related issues? Be sure and check out my blog at www.pauldgarrison.com. Thank you for your time. Please take a moment to visit our website at www.pauldgarrison.com.